Todd Horwitz, Mike Murphy, Peter Marisi, all of them together this Tuesday morning. We talk about technology every single day because that's where the money is going. I'll start with Amazon, currently at 8.41. Mike Murphy, I ask you this every time. Are you going to buy it at 8.41?
I'm not going to buy it at 8.41, but Amazon is taking on all competition, Stuart, and now they're going after FedEx, they're going after UPS, and if you look at the stock today, up over a $400 billion market cap for the first time ever. This is an all-time high on Amazon. The knock on Amazon forever was the valuation. People would say it's too expensive. If you notice now, Stuart, no one's talking about valuation. Right. Everyone's talking about the innovation. Yeah. So right now, I don't think it's a time to jump in and buy if you haven't been along for this ride already.
Peter Marisi, the valuation of Amazon is interesting because they plow almost every red cent of profit back into the company. So you can't talk price-earnings ratio. It's a totally different kind of company, isn't it?
That's right. Compare them with Netflix. You know, they're always moving into new businesses. And think about where they're moving. They're moving to areas where existing franchises are going to have a difficulty adapting. Things like, you know, driverless cars, or where there's a lot of overhead and, frankly, fat, like the express delivery business. You know, that is ripe for disruption. And with droids and so forth, you know, those planes, drones, that's quite possible. My feeling is they're throwing a lot of spaghetti at the wall. Some of it's going to stick, and the stuff that sticks is going to make people a lot of money.
Actually, a lot of it sticks the way things are going. That's
right.
Yeah. You know, I'd be inclined to sell it. If I owned it, I might be inclined to sell it now.
Never go broke taking a profit.
Yeah, and you take a big profit if you bought it even a couple of weeks ago.
Yes, sir.
How about Google?
Always take a profit. What the heck, you know?
Yeah, why not? Except you've got to pay tax on it. Google's at 8.06, 8.05 this morning, up $5. Ash, they got new stuff out today.
They are. Big event in San Francisco. 2 new phones. They're ditching the Nexus phone, which has been around for 6 years, but you wouldn't know it because you probably didn't buy it, just like everybody else. So they're changing to the Pixel and the Pixel XL. They're going to have 2 cameras, one on the back, one on the front. They're going to run on an Android system. And oh yes, they're going to have a headphone jack. But they're also looking at bringing out one of those voice-controlled speaker systems. It's going to be called Home to challenge Amazon's Echo, and a virtual reality headset, which we believe will cost around $80, which is very reasonable.
I've got Brian Fitzgerald, an analyst, says Google's going to go to $1,000 a share. What do you make of that, Mike Murphy?
Very well could be. You know, it's only a 25% move from these levels. I don't think he's really going out on a limb there. I mean, the way these stocks have been moving, I think it's interesting, though. Look at Google, look at Amazon, look at Apple, look at Facebook. They all seem to be kind of doing the same things. They're all talking about cars. They're all talking about the home. So if you haven't been along for this ride so far, which I haven't been, don't jump in here. You know, look for a pullback on some of these things.
Quickly, Todd Horwitz, you're our trader guy here, more than anybody else, I would suspect. If you owned any of these big-name techs, would you sell them now? No offense to you, Mike Murphy, no offense to you. But Todd, would you sell any of them if you owned them now?
You know, what I would do is if I owned them, I'd be protecting them underneath and hope that they would continue to go higher, but with an exit to get out of them, because I do think they're overvalued, and from this point, I'd be more inclined to be a seller. But Amazon's got a great model, and what nobody ever talks about is all the outside business that they have, where they have independent vendors that use them as a distribution point, so that they don't have to pay for inventory. All you do is collect the money. That's a pretty good model, the way I look at it, but I think they're a little bit too high.
Just collecting the money. I like the sound of that one. How about Netflix? There is speculation that Disney's interested in buying them. Maybe that's going a bit far. What's going on?
This first surfaced last Friday morning, and it's continuing to give fuel to Netflix stock prices, you can see. Listen, Netflix library of shows and movies has dropped 50% in just the last 4 years. Not as much choice on there as there used to be. It is expensive to buy the rights to all those things. They're looking to boost their original content. They have not said they're interested in being bought. Could Disney come in? Maybe. They want to add to their media and entertainment offerings, but this is purely speculation.
Mike Murphy is itching to revenge me on the grounds that I said he wasn't kind of a trader kind of guy. What do you say about Netflix?
Let's go to the videotape. When Netflix came back down into the mid-80s, I was on this esteemed program, and I said that was the time to buy the stock. So, again, I think now $44 billion, I don't see Disney going out and acquiring Netflix here, but I think Netflix, to Ash's point, although they're library is down. They're making original content. So watch Netflix. It's the way people consume content now.
I should also say that Todd Horwitz called this as well. Without going back to him for a second, that's what happened. He's nodding. That's true. Check the big board. We're up 32 points. That puts the Dow at 18,287. Quick idea of continuous purchases of stock to strengthen global economies. What's that about?
Speaking at the Bank of Japan in Tokyo, he's saying, you know what, U.S. pension plans for government workers buy stocks already. There's room here that possibly, for policies to allow Federal Reserve purchases of stock. The Bank of Japan, he pointed out, buys ETFs already, and he's also said, watch this, there is scope for the Federal Reserve to go negative on interest rates. Larry Summers making a lot of announcements here.
Todd Horwitz, you've got to get into this. What do you think, the idea that the Federal Reserve would buy stock? What do you think?
I think it's absolutely ridiculous. I think that they're just telling you that they don't know, have nowhere else to go right now.
That's right.
And that there's a lot of trouble looming out there. This is a bad, bad situation that they're trying to create and control the markets. Instead of letting the markets trade, they're trying to control them and prop them up. For what reason, I have no idea, because what they've done is not helped whatsoever. It is actually creating a lot bigger problems. Look at the debt to GDP ratio. If these interest rates do go up, guess what's going to happen there? We're already at record highs now.
Quickly, I want to go to Peter and I get Mike in as well. Bill Gross, Peter, this is for you. Bill Gross says central banks have turned the financial markets into casinos. Quick comment, please.
Well, they've pumped so much liquidity in that's fair. And with central banks essentially charging banks to hold deposits and so forth, it's absolutely absurd. But when central banks start buying common shares, it means they really are out of conventional bullets. But also, it means that their prosperity is as false as Donald Trump claims.
Okay, that's interesting. That's a good out cue. Thanks very much indeed, Peter, Mike, Todd. Appreciate you being with us on this Tuesday morning. Got it, everyone. Check that.